All right, let's take a look at these futures. Slightly lower on the Dow, down 50 points over the S&P, and Nasdaq slightly higher. Let's bring in Michael Lee. Good morning to you, Michael. A lot of people saying, hey, maybe the Fed will pivot. I've never believed that, and I don't think you do either, right?
No, I don't think the Fed will pivot until we get verified confirmation that this inflation is finally put to bed. And when I say put to bed, we're going to need several months in a row of core inflation growth of 0.0% or 0.1% or even negative. And I don't know if that's 6 months or 12 months, but the 2% target for inflation for the Fed is not a suggestion. It is a very much hard landmark that they are going to work towards, and they will not stop until it is very much verified that it's down at 2%. The way that I like to describe it is, one of these slapstick action movies where they shoot a guy who's already dead an extra 15 times. Like that's when you listen to the three Fed speakers yesterday, and every time Powell talks, that this is what they are looking for, because you do not want inflation to die down, the Fed to pivot. We're in the middle of a recession next year, then inflation picks up again, and the Fed is left with very little tools other than to take us into a much deeper, darker recession.
And you make the point that we haven't even really felt the effects of all of this rate hiking yet. That will be sometime next year, which suggests a recession. I mean, do you think it will? What kind of recession, and when do you think it could hit?
So I think the end of the first quarter is when we're really going to start seeing the effects of the Fed rate hikes. Additionally, housing turned in April and May of this year. And when it turns as hard as it has, you typically see a recession 12 months out from there. And that's not most of the time, that's almost every single time. And we've gotten confirmation from manufacturing. Global PMIs have been in contraction for 4 straight months. For the last 5 months, the new orders subsection of the ISM index has been in contraction. So all signs are pointing to a recession. And if you look at where housing is now from where it's gone over the last 6 months,
right,
that suggests the unemployment rate will be double what it is today a year from now.
Got 20 seconds, Mike. Good time to take some cash, do you think?
Yeah, I think right here you want to be reducing your equity overall positions. I mean, if the market holds on throughout, you'll just have less motion in the ocean, your portfolio. We're never all the way out of the market. We're never all the way in the market, but you could add a little bit of cash here off this recent rally.
Terrific stuff as always. Mike Lee, thanks for joining us this morning. We're getting ready to